Greetings and welcome. I am Professor Denver, and thanks for watching my presentation on basic accounting in alignment with the chapters in my book, Accounting 101, Easy Accounting and Bookkeeping for Beginners. This session is about concepts presented in Chapter 3, the General Ledger and the Trial Balance. The general ledger accounts are the building blocks of a firm's financial system and are shown on the chart of accounts. Business transactions originally recorded in the firm's financial journals are posted or transferred to the individual general ledger accounts from the entries recorded in the journal on the same sites as recorded in the journal, debits or credits, and the cumulative or updated balances in the specific general ledger accounts updated immediately or periodically in batches. Immediate updating of the general ledger account balances are called perpetual updating. However, some entries for similar frequent transactions are sometimes summarized and posted periodically, weekly or monthly, in batches to related accounts, as in cases where special journals are used. Quick notes regarding the format used for posting journal entries to the general ledger accounts. The dates are the same as on the general journal. The trans description section refers to the type of journal. The general journal, GJ, or special journal such as payroll journal, cash receipts, cash disbursement, etc. This is used when there are large numbers of transactions during the period. Accountants sometimes use the name of the corresponding account instead to identify the other account involved in the transaction for journal entries. For example, the trans description column in the preceding cash ledger account might show, instead of general journal on January 1st, owner's capital / equity, fixed assets, and the rent expense respectively for the first three lines of entries. The Journal Reference section, JLREF section, indicates the page number shown at the top of the general journal containing the transactions. In this case, page 1. The amounts are posted in the general ledger account in the same columns, debit or credit, as shown in the general journal for the account in the Post JL Here section. The updated balance section shows the latest balance in the ledger accounts after each transaction is posted, also called the perpetual balance of the account. A trial balance is a tool used by accountants to verify that all general ledger accounts with debit balances are equal in total to the accounts with credit balances. Accounts with zero balances are generally not shown on a trial balance. The trial balance does not verify the accuracy of the postings or amounts, only that the total debit amounts equals the total credit amounts of the accounts in the general ledger. A simple combined chart of accounts and trial balance are shown in the demonstration. The trial balance lists all general ledger accounts and their cumulative balances on a specific date. The sum of all amounts in the debit column of the trial balance is shown at the bottom, called footing, and must equal the sum total of all the amounts in the credit column, also shown at the bottom of the column, referred to as cross-footing the columns, to make sure all transactions are posted according to the double entry concept of accounting. Notes on the trial balance. If the sum total amounts for the debit and credit columns are not the same, the accountant must locate the reasons for the difference and make the necessary corrections. Otherwise, the resulting financial statements will be incorrect and the balance sheet will not balance as the accounting equation A equals L plus E will not be equal. Even if the total debits and credits cross-foot have equal amounts, the trial balance does not confirm that the individual transaction amounts were correct or correctly posted to the right accounts, as this is not the purpose of the trial balance, only that the total of the debit balances are equal to the total credit balances. For example, if a check is paid to a supplier for $900 and is recorded in the journal and posted to the general ledger accounts as only $90 in error, the trial balance would still be in balance, even though the records are incorrect. The same if an amount paid for rent is recorded and posted to insurance expense in error. It would not be immediately identified as incorrect in the trial balance. That is all for now. Thanks for watching this presentation. Have a great day.